Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's update our view in the gold market. So it's really interesting time when the gold market shows absolutely different performance compared to currencies, for example. So usually euro currency and the gold more or less shows the direction action in the same direction, just because they're trading both to the United States dollar. But currently the major driving factor is not based on the dollar value. So it's different for gold and the euro and other risky assets such as the cryptocurrencies. That's why we see so different performance on the market. So yesterday, as you know, Jerome Powell once again have made the speech in Congress and talked about the rate decisions and so on. Once again, they have tried to keep the hawkish tone of its speech, trying to scare investors once again with the rate raising. So he said that it's not actually proper to use pause word to explain what we're doing, and we're not talking about the pause. And actually all our members suggest that it should be 2 more rate hikes, and it's actually we're not at the end of the fighting inflation and so on. So that actually has made some effect, so on the gold market in particular, because as you know, currently the real interest rates, at least based on the treasury inflation protected notes, turns positive. It stands around 1.5%, which is actually bearish factor for the gold. More rate hikes is also bearish factor for the gold, and resolving of the situation on the crypto market, it's also not really positive moment for the gold. And all these factors just confirm our long-term views. As you remember, together with the activity of the United States Treasury, we said don't expect in the nearest 5-6 months rally on the gold market. So later we suggest that it should turn up, but until the end of the year it will remain under pressure. Maybe we will not see big drop on the gold. It resists actually very good to the negative factors, but still it's also not logical to expect any sharp upside reversal as well. So based on the performance that we see on the daily charts, take a look. Here's as we said, kind of the bearish dynamic pressure, and the trend was holding bullish while price action is not, despite that this downside breakout has happened and the market has grabbed the stops below these levels, returned back up. Market still was not able to show any more or less significant pullback, and this tendencies obviously has the bearish background and bearish sentiment. It's because market is becoming weaker and weaker, and every time when it's creating the new lows, it shows smaller and smaller upward pullback. This is just shows that the bull's power is becoming weaker. And usually when market is forming downside flags, so usually flags are forming in the opposite direction. So as we see on the euro currency, for example, in today's video, so I just remind you, this is the flag in opposite direction. So we have the upward action and flag to the downside. On the gold market, we have a bit different picture. We have downside action and downside flag, and this is very often leads to acceleration. So I won't be surprised if we will get here some nasty downside breakout. It could happen, at least maybe market could reach the 19 even area. Just to remind you, those who have read our weekly report, you probably remember that we said that nearest destination point to the downside stands around 19 even. It's just because this is strong weekly confidence support, and it's probably market is going down. So it's not that they were sold, so theoretically it could just has free space. Here's actually the chart that we were considering. That's our flag, and 1908, 1901, this is nearest confidence support. So that's why market easily could just reach it. Here it's logical to expect some bounce up. So on the daily chart, even market could start forming some bullish background, bullish patterns that could trigger more or less upward bounce. But currently at this point, we suggest that the next destination target will be around 19 even on the gold market. On the 4-hour time frame chart, we do not have something special. Market stands in downside channel, and it's probably it should continue although we'll not exclude that it might be even an acceleration. On the 30-minute chart, here's what has happened yesterday. So market has completed first the OP. Here we said that we do not expect any reversal and suggest downside action. That's what we said yesterday. And market actually has dropped right back down, completed our suggestion that it should grab the lows below this area, grab the stops below this area. Market has touched precisely the XOP and shows pullback. Now it's forming some kind of the head and shoulder shape, but my personal view that hardly we will get completion of this pattern. So more probable that this pattern will fail and market will just keep going lower. But we should keep an eye. So if head and shoulder somehow will start to work, if you're a scalp trader, you could drop your time frame to the 5-minute chart. Watch for performance in this area. If you get here some bullish reversal patterns, you could try and take the long position with tight stops, suggesting that it might be some kind of the ABCD upward action right to the 1940 area. It's completion of these head and shoulders. If market will keep going lower, moving back to the 1920, 1922 area right there, so there's more chances that head and shoulders is failing, and we should be ready for taking out of these lows and just downside continuation. That's the things that we could consider. So maybe one of the solutions might be using some stop sell order right above the 1990 area, slightly above the XOP, hoping on the breakouts. Once breakout will start, you will take the position right there. It would be better to place it slightly above, just because to exclude the slippage. So if you just place it below, your entry might be significantly lower. Just on orders sequence on exchange, and you could get a much worse feel than if you will place it slightly above. So that's actually what we have from the gold currently, except what I said about the scalp long position on the 5-minute chart. I wouldn't consider taking any longs on an hourly chart and above time frames. So there I would consider them some short entry. And today and tomorrow probably we will be watching for this head and shoulder shape. Completion of the head and shoulders, we consider short entry around 1940. Failure of the head and shoulders, we will consider entry closer to the lows, expecting of the possible downside breakout and action to 19 even 1905 next strong support area and nearest target.